All right. Once again, Good Money Podcast, Guytho the Great. We back at you one more again.
What's up, everybody? Good Money Pal, Good Money Podcast. Hope everybody's well.
Yeah. Over here looking rough. Busy day, busy week. Just been working. Figure we got to get on here.
Say something to the people, right?
Yeah, talk to the
So much
people,
is
keep the
happening,
flow
man.
going.
So much is happening.
Yeah, definitely so much going on. See, I had to go dig in the archives, bring out the Worth a Billion apparel.
I see you, man. I see you. I'm here with my, you can never go wrong with Ralph Lauren. You know what I mean?
Never.
But the rugby looks good on you, man. I must
Yeah,
say.
this is one of the first pieces we did. So this is probably like 2015.
Okay.
I got some pieces I keep in there, getting ready to get back into the clothing, but
Yeah. I think the
figured
streets
I'd
need you.
break
The streets
something
need you.
out.
Yeah.
Yeah, definitely.
No doubt. So what's new with you, man? It's been a little bit since we caught up. What's going on?
Same old, just work, got a few more clients I'm working on. Spent today just trying to lock in some rates and back and forth with underwriting, trying to get a couple clears. Hopefully we could close by next week. But outside of that, I just been grinding, man. I know you posted the other day who's shopping, so I had to go make sure I was looking around, seeing what's out there on them
Yeah.
shelves.
Yeah, and speaking of that, man, I feel like what we saw, a lot of the action that we saw, and just for context, right? Today's the 1st of October, so we're talking about quarter end, month end, September. So now we're entering Q4. This is the last stretch for the end of the year, right? And so I felt like there was a lot of portfolio rebalancing happening yesterday. A lot of
Okay.
sector rotation, a lot of money managers moving out of certain sectors that work well in the previous quarter and moving
Mm-hmm.
into other things that they think that are going to do well, right? So like I'm seeing a lot of activity right now. Natural gas is spiking up, and we've had discussions about this in the past where
Yeah.
it's seasonal, right? So you mentioned you're a big fan of One Oak. Natural gas and companies like One Oak, you're going to start to see some price action in your favor
But yeah,
as the
I already
weather starts
piled
to
up.
shift.
I piled
You
up
think?
waiting for my paycheck. So I
Nice.
got my workers out there, so when they bring back that pay.
And listen, just so the people know and realize what you're saying, right? Because when you say you got your workers, expand upon that. What do you mean by that, by your workers?
Yeah, so basically with me, with certain stocks, what I like to do is I have my amount that I hold, which is for the long term. I usually try to look for maybe 3, 5 year hold. Then anything above that, what I do when it hits a low, I purchase a decent amount. I think I did maybe 50 shares of One Oak,
Okay.
and I got it summertime when it's low. When it hits going down towards the low, I'll grab a few, and then I just wait it out for the winter. Usually I say February, March, it'll come close. Hopefully, touch a new high or come close to that high, and I'll just snatch that back out, collect my profit, do what I gotta do with that, reinvest, put a little bit to the side for the next time I'm ready to dive back in and pick up some more workers, put them back to work. So
Yeah,
that's
man.
my flow with One Oak and a couple of other companies. That's how I kind of structured my plan with them.
I see. I see. Yeah, man. Because when you mention workers, I'm thinking dollars and cents, right? Because I always tell people, you know, you should have your money work for you because your money's always going to work harder for you than you can work for it, right?
Exactly.
And so when you deploy capital into these companies, essentially the employees that work for this publicly traded company now work for you and I, right? We're shareholders. And so
Mm-hmm.
we get to participate in, the upside if the employees and the company as a whole performs well in their respective sector, we get to participate in that upside, right? And so talking about energy stocks, I find it hard pressed for them not to make money, some sort of profit
Yeah.
in that cold season that's about to come upon us. You know what I mean?
Yeah. Well, I'm
Yeah.
here enjoying this stretch of warmness we got going. So
Tell me about it.
I'm trying to stretch it all the way to Thanksgiving if you can. I'm good with that.
Yeah. This weather's nice, man. Right now it's a beautiful day outside. I did get a nice bike ride in. I got a nice 21-mile piece
But yeah, I
yesterday.
see you. I see
Yes,
you.
sir. I'm back outside. You know what I'm saying?
Gotta be. Health is
Yeah.
always wealth, man. Health is next to wealth.
That's it. That's it. Yeah, man.
I also got out of the what is it?
JetBlue?
CCL. No, not it. We got to sit there and talk off camera about my JetBlue
Gotcha.
move. Me and you,
Okay.
we got to
Okay.
sit down with that one. But I got out of CCL. What is it, Caribbean Cruise
Yeah. Yeah.
Lines?
Caribbean Carnival. Carnival.
Carnival. I said Caribbean Carnival. So I got out of there real
Sounds
quick.
like palm trees are in your future, my friend.
I had to get out of there. I was holding that for so long, just hoping for it to come back. So it came back. Oh, I saw it come back. I was up about 40%. And I'm like,
Okay.
let me see it go higher. And it
Yeah.
started coming back down. I was like, you know what? I've had enough.
I'm out of here.
I got out of there. Still like 28, 30% up. You know what I mean?
Ain't nothing
I'm
wrong with
good.
that.
Not in at all. And I've been holding that since right after COVID's when I got in.
Okay.
Yeah, so I think I got in around like it's right now it's up there. So I
Yeah.
got in about it's at
It's at
28.
Yeah, 28 and change right now. So just for that situation, right? Because you was
Yeah.
holding it for a while. You could actually collect money while you're holding the shares. You could sell covered calls.
Covered calls, yeah.
Yeah,
Yep.
yeah. You could sell covered calls to collect some cash while you're waiting for the stock to go up. The trick is that if the contracts that you sold, if they expire in the money, they will take the shares away from you. And the thing is that let's say you sold a 29 strike and you collected $1.50 per share, your sale price, if the stock is trading above 29 at expiration, your sales price will in fact be 29, but you collected $1.50, so your net sales price is actually going to be, the $29 plus the $1.50 you collected. And that's not a
Yeah.
bad scenario, provided the stock don't go to 40 and you left, you know what I'm saying? And you
Left
left
hold. Yeah,
$9 of
yeah, yeah.
upside on the table. You know what I'm saying?
Yeah.
That
Yeah.
can be
So I
painful.
think I got in there around like 21, 22. I got in there like a little bit above 10. So
Okay.
I made my money. I had to hold that bag for a while though. It took a while
Yeah.
to get back up there, but I definitely want to sit with you and figure out a way with with the JetBlue as we spoke on before.
Yeah.
But I think that
Let me see.
strategy is definitely a great strategy.
In terms of dollar cost averaging, just buying it.
Well, as far as putting the call in and collecting the fee.
Yeah, selling calls on it, right? So like
Yeah.
JetBlue, just kind of touching on JetBlue while we're on here now. This calendar year, the low is 334. Previous calendar year, low is 450. Prior to
Mm-hmm.
that, 342, right? So I would say that 340 is a line in the sand
Yeah.
because those last 3 years, that's been the range, 3 to 4 on the low side. And then going all the way back to 2011, that's the last time it flirted with those lows down here in the threes and in the high twos, right?
Yeah.
So I would say the only thing that concerns me is that was it Spirit Airlines filed bankruptcy twice this calendar year. So there's definitely some pressure in the sector, right? Sector wise, as far as the airlines are concerned, they're
Mm-hmm.
experiencing pressure. Here on my side of town, Newark Airport is experiencing some challenges securing talent by way of air traffic controllers, right? So that's a major issue. And then over here on Long Island, where I'm at, I'm not far from MacArthur. MacArthur, I
Yeah. Yeah.
believe they had a lot more flight routes, but they've cut those flight routes from MacArthur. You know what I mean? So there
Yeah.
is a shakeup happening in the industry. And it's funny that you brought up JetBlue, man, because one of my clients just sent me, he wanted me to take a look at, an opportunity for some structured notes. So UBS is offering access to some structured notes for JetBlue and another company, I believe it's Snapchat, where they're offering, double digit returns for these structured notes. And I was explaining to him, what the downside potential is in that scenario. Yeah, the 27% rate of return sounds good until you realize you can lose every dollar, right? And so, you know, I'm a fan of JetBlue service wise. So I told them the probability of JetBlue going out of business is unlikely. Snapchat is like, you know, Snapchat just doesn't want to go away. No matter how big Meta grows, Snapchat just refuses to bow out gracefully. You know what I mean? They're not waving the white flag over there.
Not at all. Not at all.
No.
So yeah, so that's one of the other ones, but we'll talk about that one. I think I'm in a JetBlue at 10.
Are you?
So yeah, yeah.
So you
That's
got
one
to
of
ask
those
yourself,
ones.
is it worth? Yeah, you got to ask yourself, is it worth deploying good capital to bring your cost basis all the way down? Not you, and you don't got to bring it all the way down to where it's at, right? You could bring it down to where it's been at the high of the
Hmm.
last 2 years. So it's at least been able to get up to $6, $7 a share, right? And that might be your exit ramp. That might be where you pull the parachute cord. Like, yo, listen, I averaged down under $5. Now the thing is back towards 7. My break even is here. I managed to get all of my money back out, break even. It'd be nice to make a profit, but
Hmm.
that's a decision on your part to make. But there's other companies out there that are not experiencing any of these challenges that
Exactly.
you could throw that good, clean capital in and make some money. You know what I mean?
Yeah. So somebody in that predicament, what would you recommend? Either just
It depends
getting
on
out.
the it depends on the position size, right?
Hmm.
It depends on the position size. Hopefully, they didn't put half of their tradable resources or half of the money they're using to investing
Yeah.
into JetBlue alone, because that's problematic, right?
Definitely. Definitely.
That's a big problem in of itself. Sometimes you might just take it on the chin and really analyze what you did wrong. You know what I mean? If you go play CSI with the investment decisions that you made, you'll see, you know what? I should have put a stop loss in there. I should have identified my risk
Exactly.
right from the rip. That's what airbags and seatbelts are for, right? Just in case.
Yeah, I'm 100 miles per hour, no seatbelt, no airbag, swerving in the lanes. No, but that's the mistake that I made with JetBlue back
Yeah,
then. And it was because there was so much volatility, so much stuff going on,
yeah,
right after COVID, and money was coming in here and there. So I was looking at it like I'm not even worried about that money.
right.
Even now, I'm not even worried about the money like that. So I was like, you know what? I'm just gonna hold it till it goes up.
Yeah.
Years pass, and it's just like not breaking to the upside. So that now I'm looking back at it like you said, I could have just got out of it, ate that loss, and took that money and made it back somewhere else.
If history is any indicator, right? The last time it was down here, it took 5 years to come out of this,
Yeah, I was looking at that too.
right? It's one of those things where it's like, if history is any indicator, again, and it took 5 years last time, and you're 3 years in the pocket here between 4 and 7,
Hmm.
if history repeats itself, you got another 2 years before this thing runs back up. So you could look at it two ways. Are you willing to wait that long? And or you can just accumulate it down here so that when it finally does go, hopefully, you've accumulated enough shares, you've brought your cost basis down to a point where you can make a profit, which is the preferred situation, or you can at least break even or mitigate the loss. You know what I mean?
Yeah, yeah. So yeah, that's something to think about. I gotta put together a proper exit strategy to get up out of there.
Yeah, I'm here, man. Listen, I'm always here to tap in to get that going, man. But one thing I wanted to point out to you, right? Because we're both pretty strong on the real estate side in terms of the services we provide and what we do.
Hmm.
I couldn't help but notice, man. I couldn't help but notice a sizable insider trade that took place. Okay, Open Door. You familiar with Open Door Technologies? Yeah, right. So Open Door. So it looks like one of the directors stepped in and bought like $2 million worth of stock, 300,752 shares. You know that last 752 shares? That's like
Uh-huh.
the last vote of confidence. It's like, yeah, I'm gonna get 300,000 shares, throwing an extra 752 for good measure. But yeah, he bought them around 665 and is sitting closer to 8 and change
Eight
now.
now, yeah.
Yeah, and then actually that happened. That was reported yesterday. Then today, somebody else took another position in Open Door. So there's definitely some activity in the real estate space that's happening right now. It looks like they bought 12,500 shares of Open
Okay.
Door.
So you think that's a sign for the upside? Because I know they've been having issues generating profit with Open Door and everything like that. So
Yeah, I would tell you like this, right? Insiders sell for any number of reasons, right? You know, divorce, business, they want to buy a new house, family trip, or, you know, they just want to liquidate. They only buy for one reason,
Hmm.
because they want to make money. You know what
Of
I mean?
course, of
And
course.
nobody's sending $2 million into a company stock that they work for of their own personal capital to lose money,
To
right?
lose it.
So yeah, so I would say that that is a great thing to take a look at. Like, hey, you know, when you're in Rome, you do what the Romans do, right? I know you
Yeah.
was just out there. So when you're in Rome, you do what the Romans do. And then also earlier, or rather, I want to say a few days ago, Main Street, which is a money management firm, they disclosed close to a 6% passive stake in the stock.
An
So,
open door.
you've got, what's that?
An open door. You saying?
Yep, we still on open door. Yep, we still on open door.
Yeah, yeah, yeah. I see that here
Hmm.
too.
Yeah. So, definitely something to keep an eye on. I'm seeing Rocket Mortgage is moving nicely too.
Yeah.
And, Rocket Mortgage, they finally completed, they bought out Mr. Cooper.
No, I did not know that.
Yeah. So Rocket Mortgage has finalized the acquisition. So that acquisition, $14.2 billion acquisition of Mr. Cooper, right? And my only reason that I'm familiar with Mr. Cooper is,
Hmm.
by dealing with clients on the private money side, I would see some of the mortgage statements for Mr.
Statements.
Cooper. I've
Yeah,
never
Mr.
heard of
Cooper.
Mr. Cooper.
I've seen that a few times too. I could say one or two times, and especially as on a real estate side, my wife definitely has a relationship with Rocket Mortgage where they send her clients.
Okay.
So she's like a realtor with them. So we've seen that come across the board, but I had no idea of the collaboration between the two.
Yeah, so as part of the acquisition, all of Mr. Cooper and its servicing functions, they're all going to be rebranded under Rocket. I wouldn't be surprised if you see, a ramp in marketing around sports, because now we're in that season now, basketball
Hmm.
ramping up, football ramping up.
Yeah,
You know what I'm saying? You just saw I don't know if you heard Bad Bunny just got announced for
for
the
the Super
for the Super
Bowl.
Bowl. You know what I mean?
Yeah,
So I got to get my salsa and merengue skills up to par. You know what I'm
that's
saying? For
big
that,
for him, man. That's big
huge,
for him. Definitely
huge.
huge
I was
artist,
watching,
man.
man. They said his concert in Puerto Rico recently,
Hmm.
$700 million in terms of total dollars brought to the island as a result of his concert. Crazy,
Yeah. What he's doing for that country is amazing. He's
amazing.
definitely top tier artist out there.
Yes,
His come up was, he came from the bottom and he did what he needed to do. So that's commendable.
yeah,
Gotta
man.
respect that.
I was gonna say, just not to, because I might put on a Bad Bunny track after we talk about him, but I wanted to just stay on the real estate front because there's a lot happening there.
A lot.
And so there's a lot of clues. There's a lot of clues, guys. For those of you watching, there's a lot of clues to look out for. We talked about, Rocket Mortgage and the acquisition of Mr. Cooper, right? So that speaks to mortgages in terms of consolidation in the mortgage space. We talked about Open Door, right? In terms of a director and another financial firm stepping in and acquiring, positions of size. I think I might have spoken in the past about Loan Depot disclosure. I
Hmm.
have a position in Loan Depot. I like what the company is doing, right? So I'm seeing some upside there. And then we also talked about on past episodes home builders and their shares being bought by Warren Buffett, right? The granddaddy of investing.
Yeah.
So you got Warren Buffett stepped in, bought sizable position of D.R. Horton, bought a sizable position of other home builders, I believe like Pulte Home Groups, and you know, I mean, listen, you got the mortgage companies being bought up, you got the real estate brokerage firms being bought up, you got the home builders being bought up, you got rates got cut by a little bit. I mean, these are called clues.
I see it everywhere, and still I keep seeing a lot of talk about home prices plummeting and real estate market crashes and stuff like that. Like it's it's a lot of that going around as well.
Yeah, let me tell you, right? So we just got to clear the close on this today, right? And that's a small loan, nothing to write home about, but it was a pleasure helping the client get this one to the clear the close
Hmm.
level. And so they're buying a property in Fayetteville, North Carolina, right? And so, but the ARV came in 80 grand short of expectations, you know? Right. And we're talking about Fayetteville, and this is not a really expensive home. So an 80 grand shortfall on the appraisal is substantial, you know? So that's what, in terms of homes prices crashing, I would say that it is market specific. And when I say market specific, I mean like statewide, right?
Yes.
There's a lot of friction going on in certain markets, like political unrest, right? Like, what is it, Chicago? I think they were talking about the National Guard coming out to Chicago.
Hmm.
And I mean, who wants to, place tenants or deal with rental properties when the National Guard's moving around? You know what I
Yeah.
mean?
Yeah. It's a
So,
lot of, yeah, it's everything. I know the Federal Reserve was saying that they were worried about the unemployment,
man, the cost of food,
cost of food,
yo,
unemployment. And then the cooking the data, there's a lot of stuff with the Bureau of Labor and everything. So times like this is follow the money. Is
yes,
see what the institutions are doing, seeing what the investors are doing, seeing what like you were saying, the mergers that are coming together and everything like that.
yeah,
So yeah, there are a lot of signs, and like it is regional because here I don't see prices coming down much where I'm at.
hmm
So I guess it depends on where you are and what you're looking for. And I think, whether you're an investor or a person looking to buy your first home or forever home, it's different. What you're looking for is different.
yeah. I will also say, man, here's the tricky thing. The tricky thing is that we're entering fourth quarter, right? Start of fourth quarter today, but the Q4, right? But the tricky thing is this: is that the S&P 500 is at all-time highs, but the majority of S&P 500 is 500 stocks. The majority of the market cap or investable assets is in like what they call the Magnificent Seven. So it doesn't give a true representation, in my opinion, of what's happening on the ground. And so if people's paychecks, let's say people were spending 20% of their paycheck on food previously, right? But now all of a sudden that number's jumped to 30, right? They've got less disposable resources to save to buy a piece of real estate because they're busy feeding themselves, right?
Yeah.
And they're busy paying for these things. It's $15 a gallon of milk by me. So
Wow.
again, yeah, it's disrespectful. It's this. If I, next time I go out on date night, I wouldn't be surprised if I see Frosted Flakes on the menu with, 2% whole milk or something like that. You know what I mean? Yo, it's getting crazy out there. But yeah, that's what I'm saying. If the S&P 500 is made up of a handful of companies, but you're seeing economic reports by way of, unaffordability or credit card defaults or an increase in bank car repos, right? Or an uptick in foreclosures in certain areas, And then on my side, on the private lending side, we just lowered our credit box to a lower credit threshold. So we're trying to catch customers or clients who fell out of that box previously, who couldn't qualify because their FICO wasn't where we needed it to be. Make sense?
Yeah,
So,
definitely.
you know, I'm seeing things out there that make me raise an eyebrow that makes me feel like, hey, we should be careful here. And then you got the government shutdown that just happened,
Yeah.
right?
And what does that mean?
Bro,
Again?
bro, like, yo, you real spill. I think, I said this on a previous episode. I said, how many times can they shut the government down or just kick the can? Because what I thought was going to happen in the 11th hour, and I should have known better just because of the current administration, right?
Hmm.
But typically, what I've seen in the past is they'll let it get to, no BS, bro. They'll let it get to like 11:58 and then approve the budget
Right at the
so
end,
the
right?
government stays open. You know what I mean? But this time they let it close. And I remember the first time I ever seen the government close. All government functions, like, postal workers, things of that sort, they're all impacted, but the impact is felt differently. So it impacts different aspects within the government, right?
Yeah.
And I would just say that they'll come to a resolution sooner than later. But one thing that I found to be strange was the fact that, you got at this current administration, you got international alienation with different leaders, right? They're getting herbed, so to speak, by our current administration.
Yeah.
And I would just say this, man. I don't have an opinion about our current commander in chief, one way or the other. I just, as an investor, my job is to position myself in front of the moves that the man in charge is going to make.
Yeah.
I don't form an opinion one way or the other.
It's it's laid out. I think it's laid out clearer than ever. You're seeing
Hmm.
the relationships that are being forged. You're seeing where the money is going. You're
He's easy to
seeing,
read, right?
yeah, all these collabs that are coming
Yeah.
together, all the, the investments, and it's like they're putting it right there. And
No, it's
so
in there.
many people are profiting off of it. And you
Yeah.
see by who's profiting off of it. You know what I
Yes.
mean? So it's a big thing. There's like other things involved in that we'll go into as we go on in the show. But I also want to bring up the interest rates too. I
Yeah.
know before we started, you asked me if I saw a uptick in clients with the interest rate drop, and I was like, not really, not yet. So that's also something to look at. Do you feel like more people coming into the market now because of the interest rate, or it's just not down enough to cause that big of a difference?
Say that the rate cut has brought out people who are interested in knowing where they're going to land,
Mm,
right? Whereas they were on the bench or the sidelines because they just knew that interest rates were high. But the minute that they heard that there was a rate cut, they're like, hey, maybe I should consider a refinance, right?
yeah,
Interestingly enough, I got a credit box reduction allowing me to service customers with a lower credit score. But on the upside, I got something that I've yet to ever see in the industry. And I've been at this for a while. We can do 80% cash out refinance. So I'm getting a
yeah.
lot of
I
interest
remember
on
you
that.
said that.
Yeah. On non-owner occupied investment properties, we could do 80% cash out refinance. I've just never seen it before. I'm not saying it's never existed. It's just I've never seen it. Right. So the fact that this rolled out now, right in time for the interest rates to be cut.
And it's like, I think the big thing, people got to really be wary with the refinance and everything that comes with it, because you really got to look at your numbers and see where you are. A lot of people are seeing the refinance, but you got to make sure that what you're getting yourself into is worth it. You know what I mean? There's a lot of people that they'll come out there, they want to cash out and go buy the new car,
Mistake.
go spend that money, and then be back in the hole in a couple of years later instead of doing the proper thing. I think if you're going to refinance, make smart decisions. Invest. Like, that's what everybody should be doing in these times. If you're looking to take money out of pull your equity, I think the best route to go with that is invest, whether it is getting into an investment property. Like, what I usually tell a lot of clients that are refining or looking to pull equity is like, all right, now you pulled this money. Now we got the program, as we explained in the last episode, the DSCR. Let's take a chunk of that and move it into a investment property where you could at least build a portfolio, get some income, instead of taking that money and doing foolish things with it and having to repay it.
Yeah, I just did a deal. It closed. It closed yesterday at
Mm-hmm.
12 noon and it funded today, right? Cash out refinance. And the investor bought it in April of this year, right? Did a light renovation and decided to pull the cash out, right? Funded today. I know he got paid because he immediately is in my inbox talking about, yo, man, I got another deal I want to do. I got another deal I want to do. But you know
Mm-hmm.
what? That particular investor netted $400,000 in net cash proceeds between two cash out refinances on deals that, I mean, the numbers are crazy, man. It's a brand new investor, right? So that's what I'm saying. The rate cuts or the talk of rate cuts are bringing people out or getting people into the arena who are brand new investors, never invested before. And I'm happy to see it, man. Whether you're investing in stocks, whether you're investing in real estate, whether you're investing in alternative investments, somebody else's business interest. Bottom line is you have to deploy capital, right, out there in pursuit of a rate of return. You have to, right? Because if you don't, you are going to find yourself on the wrong side of inflation and on the wrong side of these bills, man. I promise you. Yeah,
So you think, as far as the rate cut, you think it's better situation for the investor than the residential buyer?
I think it's better for the investor because the investor has annual rent increases that are baked into their business module, right? Or their business practice. I think that it's better for the investor because a rate cut is going to bring out buyers, right? Because as rates come down, buyers are feeling like their affordability can go up. So if you were picking up investment properties, distressed properties to do a fix and flip, and you timed it right and you completed your rehab and now it's back on the market with lower interest rates, you might get more qualified bids, right? So I think it's a win-win for investors overall, but I think there's definitely some more room to go as far as rate cuts are concerned. We could
Yeah,
we could stand to have another rate cut or two before the end of the year. Will that happen? I'm not sure of the likelihood of that happening, right? But I have seen some financial news outlets talk about that, we should be careful about cutting rates further, and
yeah,
quite frankly, I think they're speaking from a place of comfort because those guys are investors. They're not really worried about it because their food bills are covered by, their investments in their other business
the
practices,
investment. Yeah,
So it's one of those things, man, that no matter how you slice it, you have to invest. Your livelihood literally depends on it. Nike reported, right? I don't know if you saw that Nike reported, right? They were getting hit hard from the tariffs and gross margin pressures. So that stock is up 4%,
yeah.
a little more than 4% on Q1 earnings. So that's a good sign to see. And then speaking about Warren Buffett, he's looking at a $10 billion acquisition of. You ever heard of Occidental Petroleum?
No, no.
They're a petrochemical. They're an oil company, Occidental Petroleum. So he's looking at buying a piece of the business, petrochemical part of the business. He's looking at purchasing.
Nice, nice. So you think there's a
Yeah,
future? You think for Nike? What do you think about the Nike as a brand and everything?
I mean, I think that Nike as a brand is it's kind of like, see, I was going to make a comparison and say it's kind of like Disney, but that's a tough one to compare it
Yeah,
to. Even though, yeah, it's tough to compare it to Disney. I would just say that Nike, that's a strong brand. Like that intellectual property brand wise is
yeah.
strong, and I know that companies like Hoka and Cloud Nine, the Cloud sneakers, I
Hmm.
know that they've eaten some of the margin share by way of running sneakers, but I think Nike will be fine. I've noticed that they've returned to a lot of their nostalgic, like when we was coming up, right? The Air Max 95s, you know what I'm
Yeah.
saying? They've
Hmm.
returned to that, you know what I mean?
Yeah, they had to. I just don't see them doing anything, especially with product that's great or different, you know what I mean? Or
Hmm.
no innovation when it comes to their product. They just basically been sticking to what has worked. I think when Kanye had his shoe come out, you could see a lot of innovation in the shoes and different sneakers and different products that come out. I think that's something Nike is lacking, like the newness of it. They really are thriving off of nostalgia, the old styles and old versions coming back. I think that's really what's keeping them going. You know what I mean?
Yeah, so like, just kind of piecing through their report, they've gained more traction with their wholesale partners, right? So that's
Hmm.
like, the Foot Lockers of the world, So they've gained, traction with them. Revenue did grow 1% year over year. That's better than the forecast of mid-single digit decline.
Hmm.
Wholesale demand in North America led the way as far as revenue is concerned. And the inventories declined 2%. So that's important, right? So that means they're getting stuff off the shelves,
Yeah,
if the
yeah.
inventories are declining. So they're getting stuff off the shelves. Digital traffic fell by double digits because they're going back to a full price strategy. Interestingly enough, the China revenue declined 10% year over year, So you're looking at a situation where North America strong, but China is softening. North American revenue, right, on our side of the world,
Uh-huh.
that revenue grew not by much, but it grew 1% year over year, better than the forecast, right? But China's revenue declined 10% year over year. So, you know, tariffs, as far as tariffs is concerned, The impact was 1 billion before, previous quarter. It hit him for 1.5 billion this time around. Yeah.
So tariffs are starting to really take their toll.
Yeah. Oh, yeah, absolutely. We got some new tariffs that were launched today. I think they mentioned a 50% increase on kitchen cabinets.
Oh yeah.
Tariffs.
Yeah. I saw that. That's ridiculous. That's ridiculous. And it comes with a lot of the builders and everything getting their equipment. It's been so much talk of how cheap construction material and stuff are in China. And so
Right.
many builders were like, I know guys that was a fencing company out there in Long Island. They was
Hmm.
getting freight sent over here. They was getting all their fencing from overseas. And
Word.
it's like, yeah, everything got froze. There was like they had freighters out there that they just couldn't even bring in because it didn't even make sense because of the pricing and everything like that. So, you know, president wants everything home, man. He wants everything. I think it's if you're manufacturing home and you get a little slider on a tariffs.
You gotta listen, man. It's kiss the ring at its best.
I know something else, out there, the whole EA Sports deal. I see
Yes.
that all over online, which I believe is one of the biggest leverage buyouts that we've seen yet. And I think there's a lot of interesting points in there to look at as well. So I was just digging through and seeing it, and I also saw that one of the people in this acquisition is what is it, son-in-law of the president?
Okay.
Yeah, so I know his company was part of that, along with Silver Lakes, and I think it's the Saudi Arabia Investment Fund Group.
Hmm. Yeah. So the value in an EA, right? The major value is as far as the streaming community is concerned, right? Live gaming. So live gaming is a big thing. And so those guys over in, Qatar, Saudi Arabia, United Arab Emirates, they want to get a foothold on live sports. Like I think, Abu Dhabi is setting up the NBA out there.
Hmm.
So there's a big push into live sports in that part of the world. So seeing that acquisition, that didn't surprise me. It surprised me that it was EA, but it didn't surprise me that, they would pursue a company like a EA. And the reason why I say that is because I just know that when it comes to live content has the most value right now, right? In terms of like sports franchises, right? Sports franchises are fetching the highest numbers that they've ever fetched, ever right now.
It has to be something worth value because I believe that they purchase it for way above. They have a 25% premium on it. Oh, and they're
That's
going in it
huge.
with a large debt. Yeah. So they're buying it way over what it's valued to be.
Hmm.
And the group of people that are involved in it has to be an upside that they see or something that they're planning for the future. So the live, the gaming, now it's going to be parts where you don't even have to go to the game anymore. You put on your goggles. Next thing you know, you're in the game, technically in the game yourself. So that's going to be
Man,
a huge market with all the AI coming and the VR and the augmented reality. So it makes sense. It makes sense.
yeah, we got a EA acquisition before we got GTA 6. Word, you know what I
Yeah.
mean? So,
Yeah. So, we got to wait and see what comes out of that.
there's mixed feelings about acquisition, right?
Mm.
But I can't help but notice that Jared Kushner, who's very close to President Trump and has his
Hmm.
own private equity firm, I can't help but notice that he was involved with the acquisition in Saudi Arabia. It's nice to have
Yeah.
this kind of friend.
Yes, right. Right. It's nice to be able to follow the money so closely.
Yes.
So certain stocks jumped with this. I saw, we always go back to Roblox, you know,
Yeah.
that jumped a little bit with this news.
Yeah. Roblox is until my kids, man. That's it. When I see my kids are disinterested in Roblox, then I may consider selling some. Yeah, then I may consider selling some. But until that happens, more Robux for everybody. You know what I
Yeah,
mean?
it's been good for me. It's
Yes.
definitely been good for
And I
me.
think and I think it might be looking like it's ready to make another run. Yeah, we had a nice the last pop came by way of on Roblox. They reported back in July, the end of July, right?
End of July,
And
yeah.
yeah, revenue. They had a revenue upset to the upside of 164 million, which is 12%, a little over 12% more than they were anticipating, right? They were anticipating 1.27 billion, they got 1.44 billion dollars in revenue, right? Even though the earnings per share, they incurred more costs. I mean, not by much. They were only expecting, a loss of what? They were expecting a loss of 36 cents. They got a loss of 41 cents. So you managed to squeeze out an extra $164 million in revenue, right? But it cost you an additional 4.5 cents per share to acquire that money. Yeah, So not for nothing, their business is the metric on their business for Roblox is monthly active users, daily active users, right? And dollars per user in terms of what they can capture by revenue on these daily active users, how that's increasing over a week by week, month by month, quarter by quarter basis, right?
Hmm.
And same thing for the monthly active users, right? And then the partnerships, So
Yeah.
I remember they had a partnership with DJ Khaled, if you could believe it.
Yeah, they had a
Yeah,
lot of partnerships.
a
Polo,
lot
they
of
have
partners.
all types of partnerships over there. Maybe they're the next ones. Maybe somebody will come and acquire that next.
Nah, I don't think so. I don't think so. I thought so when it was 40, 50 a share. I thought
Uh-huh.
that was the time. If anybody was going to get it, I was like, that's the time to
That's
snatch
the
it up.
time.
Now, 3x, they've gone up
Too big.
threefold. You're too late now. You too late to the point now. They're gonna make a run for 200. I'm
They,
calling
they,
200 on Roblox.
yeah, I think they'll get there
Yeah,
easily,
I'm
easily.
calling 200 on Roblox. So
Look,
Roblox is a
it's
mainstay. You heard it from me. Until my kids stop messing with the Roblox, it's more Robux for everybody.
Yeah, and I feel like it's the same as with the music, with a lot of investors and people looking to make money off of music. Video games is going to be the next area. It's a lot of
Okay.
attention there. You can gain a lot of attention. There's a lot of money moving around there. You know how video games sell out like crazy, and it's just I think that's going to be the next move, especially with all the you have the online gamers, the streamers, and the gaming leagues and everything like that. So I think that's going to be a big play. I definitely feel like they have something big up their sleeves with everything that they're doing.
I think really Roblox really took off when they incorporated AI because it really helped with inefficiencies to deal with some of the claims of fostering an environment that's easy for predators to gain access to children. I think
Hmm.
that when they employed those AI tools, that helped to clean up the situation and it just made for lots of improvements, right? So I think, they've benefited immensely off of AI. It's reflected in the price of the stock.
Yeah, so they bounce back pretty quick from that.
Yeah. And listen, man, I tell people all the time, sometimes these companies unintentionally violate the consumer or the market that they serve, right? And I'm not saying that Roblox did anything purposely to, entice predators to be on the platform, but they definitely fixed the gaps with respect to making it a safer space for
Hmm.
children, for young people to be on Roblox, right? So, that being said, I think until them kids is disinterested in Roblox, man, that's one of them ones. That's one of them ones
Yeah,
right
definitely. My daughter's on that thing all the time.
there. Yeah, absolutely. So outside of that, I would say that, things to pay attention to for this quarter, right? This upcoming quarter as we go to close out the year.
Hmm.
You've got, what do you got? You got Black Friday that'll eventually get here, right? That's retail. That's a drive into retail. You
Retail.
got cold
Yeah.
weather. You got coffee is something that people should be taking a look at, right? So I know one of my colleagues I used to work with, reached out to me on Facebook about Starbucks. We talk stock all the time.
It's a lot of mixed feelings there with Starbucks.
I told, and I'll say this, right? I just told them that it looks like it's good to accumulate the shares, meaning it looks like it's just going to hang around here for a while. Don't look like there's any lateral move to the upside or like a potential vertical move anytime soon. And that could be
Hmm.
good news for the investor who dollar costs averages. They dollar cost average. Every paycheck they're buying, they're buying stock. The Starbucks in the 80s right now, 84 and a half, probably a good situation to accumulate, right? Because I imagine as the weather gets colder, people are going to drink more coffee.
Mm.
So, um, yeah, I like Starbucks for an accumulation. The last time, back earlier in March, it was all the way at 115. Don't know if it gets back there, but a move from the mid 80s to back over 100. I don't see that being unlikely. Also, Disney. I did notice, man. I was logging into Disney Plus. One of my kids wanted to watch Moana,
Mm.
the new Moana movie, and I got a nice big banner that said effective. Let's see what date. Hold on one second.
Yeah, I was just on Disney last night
October
with the kids.
21st.
Uh-huh.
As of October 21st, Disney Plus is going to raise their prices to $18.99 a month,
Yep. Yep.
right? So, I mean, they got to pay for that Jimmy Kimmel stunt, huh?
You know what's crazy though? I feel like at one point we thought we was getting over with all the streaming and everything. It was like, all right, we don't got to pay for cable. Now we're paying way more than we were paying when we just had cable. It's better. Now you got to pay for a Disney app, Netflix app, Stars app. You start adding all these things up.
It's a
You're
shakedown.
paying way more.
It's a
It's
shakedown,
a
man.
crazy shakedown. And then they, like you said, they raise the price whenever they feel like it. I
That's
think
it.
my YouTube premium doubled. I just saw
Oh my
that the other
God.
day.
Yo, it's funny. It's funny you mentioned YouTube, right? So YouTube parent company is Alphabet, otherwise known as Google.
Yes, Google.
I was at parent teacher night for my kids, beginning of the school year. And I
Hmm.
couldn't help but notice that all the classrooms are run off of Google Classroom, right?
Yeah, yes.
Yeah.
My daughter too.
Yeah. So all the academia, I'm just trying to put two and two together, but I'm sitting here and I'm hearing that they also run Google Classroom in London as well, in the United Kingdom as well, right? So they're running with Google Classroom. And I'm sitting there, I'm like, all right, so you got all these students pertinent information at this
I didn't
young,
even
ripe
think about
age,
that.
right? You got all this data aggregation going on at this young age. You've got the teachers are now dependent on the Google Classroom because like that's the first thing out of these teachers' mouth. Everybody's like, oh, you can find this stuff on Google Classroom. I kept
Hmm.
hearing it. Google, Google, Google. I'm like, damn. So you got all that information now. And then you got, I know Google was in trouble, or not necessarily in trouble, but there was talks of a settlement that just happened because they were getting scrutinized over in the United Kingdom for how can
Data
I,
breach.
yeah, not a data breach. No, not a data breach. They felt like there was some sort of a monopoly on the services that they provide.
Yes, yes.
They
Hmm.
recently settled it. Yeah, they recently settled it, and the stock shot up on that. Right, it went in favor of Google.
Yeah.
Right, so I'm sitting here. I'm like, yo, man, Google, is probably it's an older name, but it probably is a name that has a lot of upside potential just because of by way of what they're doing. Because sooner or later, these kids are going to become adults and they're all going to have
Hmm.
Gmail accounts and Google's going to have all this data on these kids,
Yeah.
So I thought of
I
that.
didn't even think about it there. I didn't even think about that.
And then I'll tell you another thing I was thinking in the same breath, parent teacher night. The students, at least here in New York State, it's a law. The students can't have phones in the school now.
Yeah.
You cannot. Yeah, they have banned phones in the school, cell phones. So you can't have them in the classroom. You got to put them in your locker. You know what I'm saying?
Hmm.
So now I'm sitting there thinking to myself because when I'm out jogging on my route, there's a cell phone tower. It's owned by American Tower, right? American Tower is a publicly traded REIT, a real estate investment trust that owns cell towers around the country. And I'm noticing that the stock is down since the school year started. And that's because the students are not able to use the
Use the
phones
phones.
as much. Yeah, so it's funny how these decisions that happen impact the assets that we own by way of stocks to the up or the downside, right? And you should be mindful of this stuff. But this is the kind
Yeah.
of stuff I'm thinking about. The teacher's telling me about what's going on with the curriculum. And I'm like, wait a minute, you said no more phones? Oh, American Tower is going down, right?
See,
And
you
then
got
I'm
it. You
thinking,
thinking different.
own where you shop, right? That's what I'm thinking. I'm thinking own where you shop. So it's like Y'all all using Google Classroom? All right. Note to self, buy more Google, right? The kids are not allowed to use cell phones in the classroom? Note to self, American Tower is no good. Watch out for the cell phone carriers. You know what I'm saying?
Google's not going nowhere. They're
No.
forever growing. Looking at these lawsuits, I see that YouTube had to pay 24 million to Trump over suspending his
His
account.
account. Yeah, his account. Yeah. One thing
Yo,
he gonna
man,
do is he gonna get his get back. That's one thing he gonna do.
man, Trump,
He
Trump,
don't
Trump.
forget. He does not forget. If you've ever violated or crossed him or his peoples, he is
Hmm.
coming for you.
Let me ask you, what do you feel about the Google collab with what's it called, the car, Waymo?
I'm in there. Remember, I told you I love Lyft.
Yeah, but Lyft is, I think Waymo is Uber.
No,
Yeah, I believe so.
no,
No,
Waymo and Lyft did a partnership. Waymo and Lyft. So it's Waymo and Lyft, and they got a leadership change over at Lyft.
no. It
So
says here. It says Waymo, owned by Google's parent company at Alphabet, partners with Uber to
did
offer
they?
rides in select cities. So I guess this is Waymo and Uber are in Austin, Texas, and Atlanta.
And then Waymo and Lyft are
Let's
in
see.
Nashville.
Okay, so I see what's going on. I see what's going on.
I would listen. I would say this, right? Waymo is in.
Nashville, yeah.
Yeah, so that's the news that I saw. So they're offering autonomous rides in
Hmm.
Nashville on Lyft's platform, right?
Yeah.
But Waymo, owned by Google, they're their own separate company. So
Yes.
they can partner with whoever they want to partner with. I wasn't aware of the Uber partnership, but it makes sense, right? But for me, I've been a shareholder in Lyft and still maintain a position in Lyft. So with that, I think that Lyft for me, Uber is like at all time highs, right? I
Yeah.
really don't like it, not to say that I won't buy Uber, but I really don't like buying stocks at all time highs. I just in the back of my mind, I feel like I've missed out on all the upside. I got to
Yeah.
do a thorough assessment to see if there's further upside. But as far as Lyft is concerned, I noticed that they're noticeably cheaper when it comes to hitching a ride on Lyft versus Uber,
Hmm.
right? And I noticed that operationally there were some inefficiencies, so they got rid of a couple of key people over at Lyft.
At
And when they
Lyft, yeah.
replaced those people, that's when the investors, I would say the institutional investors, got really confident and said, you know what, we got new leadership in here. Maybe they could turn this thing around, right? So I've been in Lyft since it was in the teens, and so here we are in the 20s now. I think we still got some more upside in the Lyft.
So yeah, so that's definitely, I agree with that as well. But now just putting that one and two together there, like just seeing them with Lyft and then with Uber. So do you see a bigger partnership in the future? You think it's better for them to just become their own? Google has the infrastructure, they have the data. Why do they need Lyft or Uber? Do they come out next with their own share ride system?
Good question. So it kind of that question reminds me of how Apple approaches things, right? Like Apple doesn't do it first, but they do it better,
Mm-hmm. Mm-hmm.
right? And so with Google, Google's business, no matter what subsidiary they start, invest in, or open, Google's business is data. And so
Exactly.
you got to imagine that the motivation for the partnership between Waymo and Google or Waymo and Uber is that Uber and Lyft are data rich by way of driver behavior, right?
Driver
Or
behavior.
ridership behavior. So if Google is hungry for data and Lyft and Uber, their market share is increasing, you know what? We're going to partner with these guys. And I imagine that there's some sort of revenue share split, but there's definitely a data split, right? Or a data
Mm-hmm.
sharing arrangement that's happening. Yeah.
Yeah. So I'd like to see where it goes from there. If Waymo splits off and become their own company with their own app, competition for Uber and Lyft, because I could see that happening.
You know, I've seen a lot of companies lose a lot of money trying to
Trying to,
reinvent the wheel. You know what I mean? I'm not saying it's impossible for Waymo to do it, but they might look at it and say, you know what? it might just be better off partnering, right? Because they're just going to do it from a cost benefit analysis. They're going to say, hey, is the juice worth the squeeze for us to start a whole new thing, right? I
Hmm.
mean, think of it this way. I'm wondering where we're at. I remember seeing big news about Amazon stepping into pharmaceuticals, if you
From
remember that one, right? And I don't know how that panned out. I don't know if they're still working on it. I haven't paid too much attention to that, but I've seen a lot of companies try to come in and reinvent the wheel, and only for them to bow out and say, nah, this didn't work out.
Yeah, I think Apple came up with the same thing. Apple was going into the medical side of things, and
Yeah.
they kind of slowed down on that as well. So I understand. I get
Look
that.
at
I
the
definitely get that.
look at the glasses for Apple, right? Who's paying $3,500 for those?
Nah.
Man, if somebody walks into a venue that a certain demographic hangs out at and they wearing them glasses,
Annie up.
they telling them to come up off those glasses, man. Because the
Yeah,
first thing
yeah.
I'm gonna see is you got $4,000 on your face. I need that right now.
No, I stick to my meta glasses, man.
Word.
Love those things.
Hmm.
I thought Tesla was going to be the first ones to really do the taxi, the driving, the automated driving, and all that with the taxis.
I'm still waiting to see two things on the road. I want to see the Roadster that
The
everybody
road.
gave $50,000. Roadster, the
Yeah,
prototype that he shipped in outer space and is still floating around out there somewhere.
yeah.
I want to see.
That's was supposed to be out years ago, right?
Yes, yes. I'm waiting for the Roadster, and I'm waiting for the Cybertruck. The Cybertruck that UPS and Pepsi put $75 million down
Mm,
on, and have yet to see a Cybertruck on the road. And I'm not talking about the Cybertruck, the consumer vehicle. I'm talking about the
yeah.
actual semi.
Commercial.
Yeah,
The
I'm talking
semi.
about the
Yep.
semi tractor trailer.
Hmm.
Whatever that thing is called that Tesla had put out. I'm waiting to see those two on the road.
We'll see. We gotta wait and see what comes. Elon is back. Is back to work, right?
He's back to work. And now it's the battle of the billionaires. It's between him and Ellison. Larry Ellison.
Larry Ellison. Yeah.
Oracle shot up
Oracle.
crazy. Oracle shot up crazy. And I know Elon's probably sitting at his desk like, who? What? Who's the richest man in the world now? Nah, nah.
Hmm.
Listen, I'm
But
just a
again,
lowly shareholder along for the ride. That's all.
yeah, he lost his seat at the table.
But yeah, brother, I would just say, it's the beginning of Q4. As we progress into the month, we need to definitely get a handle for ourselves and the viewers. We need to get a handle on what's ahead of us, right? You got a lot of things happening by way of, you know, season change, kids are back in school. There's going to be a definitely major push to expand upon investment strategies in AI. Real estate is the talk of the town. On my side, on New York, we got the upcoming real estate expo in Manhattan that I'll be attending. I'm actually, I have a table out there, I have a vendor slot over
Nice.
there. So
What date is that?
that is the end of the month. I believe that's the 30th. Let me get you a firm date right
Yeah, I'll definitely try to look into that as well.
now. Yeah, it would be good for you to pull up, man. And then I got a private equity conference that's on the 30th that I'm going to. That's in Manhattan as well.
Staying busy, staying busy.
Got to, man. Yeah, got to, So there'll be artificial intelligence companies, there'll be public and private companies, private equity and venture capital companies out there. So it's looking like there's going to be about, I want to say, maybe 80 different companies that are going to be out there. So that should be a good time. That's on the 30th.
So
Yeah.
outside of that, I know I've been hawking on you about some options classes and different things like that. I know we came
You
up
don't
with a
forget.
nah, don't forget. We gotta make that happen, man. The people wanna know.
I don't know nothing about options, man. No, I'm just kidding. I tell people like this, right? Options are like, you buying calls or you buying puts. It's like pulling an ice cube out of the freezer. The minute it comes out of the freezer, it starts melting, right?
Mm,
And the conditions in terms of how fast it melts depends on the environment, right? If you're in the middle of summer, that ice cube is melting very fast, right? Meaning
yeah.
you're nearing expiration. But if you're in a situation where, you're in the winter, that ice cube is not melting as fast, if that analogy makes sense. But I would say that, in terms of getting people started with the understanding of options, they are derivatives of the stock that the person is interested in. And so each option contract allows you to control up to 100 shares of stock, right? So I tell people when you buy stock, it's like using a handsaw to cut a piece of wood. But when you buy stock options, it's like using a power saw, right? And so if you had to build a house, you could build a house a lot faster with a power saw than you could with a handsaw. But you could also cut your arm off with a power saw a lot faster than you could with a handsaw, right? Right. So a slip of the wrist on a handsaw, it's a bandage. You're going to fix it. It's a little, hydrogen peroxide. You clean that up, and it's a bandage. A slip of the wrist on a power saw, and so you got to be careful with options. That's why I'm like, I'm not in a hurry. I'm not in a hurry on that one because I don't want nobody in the comments talking about, yeah, you said options is easy, and I lost everything. Nope.
It's not easy.
Yeah, but we definitely going to get to that because options are powerful,
Hmm.
and even though they're extremely risky, there is a way to do it safely. You know what I mean? It's like I talked to you about, right? Selling covered calls or writing cash secured puts.
Hmm.
You know,
It's
so
just having the education and knowing what
it's
to
just
do.
having the education, yeah. And that's an episode we literally gotta hone in on that one, and we'll probably spend the whole episode just
Yeah,
uh
yeah, yeah. We
just
got.
focused on that to
Don't
do it
worry.
justice.
I'm gonna make sure we put something. I'm gonna put Paul in the headlock, and we're gonna come up with something for the people.
Let's go.
Yes,
Let's
yes.
go.
But
Yeah, man, I think that's a wrap. I think we shared some good information with the people.
mhm,
It's the first of the month, and I'd like to really get a
it's the
handle.
first of the month.
Yo, yeah,
Top of the new quarter, first of the month.
absolutely.
We'll sign off from there. We'll definitely be back with another episode real soon. Good
Yes,
Money
sir.
Podcast, Guytho the
Yes,
Great.
sir. Good money, pal here.
Yes, always good money. And we'll get back with you guys soon.
That up.